starts.
Good evening, friends and senior chartered accountants. I am R. Mageshwaran, a co-opted member of SIRC, practicing at Coimbatore. I have great pleasure in welcoming you for this. And something like it's a topic. It's not a regular mundane topic. It's a very interesting. I think it will be very interesting, and also it's latest. It's technology. And for this, I have great pleasure in introducing today's speaker. You will be surprised and stunned to hear the multi-talented. I think I don't know whether I ought to call a accountant or artist. Yeah, I will just introduce profile of CA Annapurna Srikanth. Annapurna Srikanth, a chartered accountant in Mysore, practicing for the last 12 years, handling direct and indirect taxation, audit, consultation, litigation. CA Annapurna has been an academic achiever, securing All India third rank in all the three qualifications, namely CA Diploma in Information Systems and Audit and CS Company Secretary. She was the Vice Chairperson of State GST Committee, FKCCI for the year 1819. She was also the co-chairperson of Women Entrepreneur Committee, FKCCI for the year 1920. She is an empaneled member in the Faculty of Indirect Taxes Committee of ICAI. She is the most sought-after person at various professional forums and for government in conducting training programs for practitioners, trade and officers, and in about 200 programs. She has contributed to a book titled GST An Abridged Compendium, published in September 2019. She was a part of the compilation team for a compendium titled Synopsis to GST Law, published by the Institute of Tax Practitioners of India. Some of her articles on GST have got published in e-magazines of professional bodies. She has developed mainly handy templates, trackers, compendium, and other resource materials on GST. She is the knowledge partner of an app on GST titled Insta GST, a knowledge-oriented GST app which has various verticals like Insta eGal, Insta Q&A, Insta Hub, and more. She has bagged medals, awards, and certificates felicitated by various professional, public, and private organizations. To name a few: silver medalist by ICAI and ICSI for securing All India third rank, gold medal and excellence award by Vasavi Union Bangalore Women of Excellence Award, and but that other facet of CA Annapurna. She is a playback singer too and has bagged many awards in music contests. To name a few: Kuku, Nityostava. She has won a YouTube channel titled Fusion Ragas, Traditional Meets Modernity, a blend of Indian and modern flavors of music. At the end, I would invite all you to visit that YouTube channel, which I experienced. Okay, with these few words, I have great pleasure in introducing today's young, dynamic chartered accountants and artists. Please, take you.
Thank you very much for your kind introduction. That was really very nice of you to introduce the entire thing about me. It gives me literally a great pleasure being a resource person for SIRC of ICAI. And we have chosen a very interesting topic: harnessing technology for resource optimization for the GST assignments. Today, all of us, face challenges when things come across with respect to the compliance, or now that we are receiving a lot of notices and the litigation has really taken a huge swing under the GST law. We would be receiving so many notices, including the audit under 65. All these things are happening. How we can structure our work, how we can use the technology with the available resources, how optimistically we can use them so that we have the requisite documentation and we use the technology in a way to do the resource optimization. My session would be more of the practical front. We would be discussing certain concepts, and I would also be demonstrating on what kind of things we can have so that it can ease our practice as professionals, because we see that a lot of our time is going into the compliance, these technical issues, the portal matters, a lot of reconciliation works. So most of our time, professional time as a team, if we take in our office, is probably getting devoted to the repetitive tasks and figuring out or reconciling things and all that. How we can use technology or couple of tools and couple of demonstrations I'll be taking you through, so that we can minimize, we can use the technology wherever there is repetitive task, and wherever the analytical area would be required, there we can use the human resources to a proper extent. So that would be the objective of today's session, and that is the preamble to the title which I've coined for today's session. So just give me a moment.
I'm here to see the screen sharing.
Yeah, just about. I hope my screen is visible and my audio
Now
is
it's
audible.
visible. Now it's visible, ma'am. Yeah, visible. Please continue.
Okay, sure. So here we go. Harnessing technology and resource optimization for GST assignments. So today's session I've kind of compartmentalized into two parts. Part one, we will be looking at the GST configurations in a software like Tally, where if at the first instance, if things have gone right, because at the root level, if we address the issues, the output would be taken care. So that is the whole perspective. I have taken the screenshots from Tally because as chartered accountants, we have been mostly familiar with Tally for the SME sector especially, and most of us are quite widely using this software. Otherwise, I do not have any interest in any of the softwares which I'm discussing today. It's more out of my personal experience and ease or convenience, whatever we have experienced in our office. I'm just taking you through this presentation with a practical approach. So as far as this configurations is concerned, there are some quick fundamentals and the levels of configurations, some of the practical illustrations, and the GST statutory reports and the mismatch management. And also we will discuss about how do we create masters for an optimal mix. So this would be covered in the first part of my configurations. Wherever required, I'll be touching upon the legal aspects also. If we understand the provisions and then correlate with the practicals, I'm sure the benefits can be manifold. So that is the purpose for which this session has been designed in such a way. The second part is the documentation part. Again, I've built some sample formats or sample documentation samples where I'll be taking you through how things can help us when we get the assignments later on, because we generally see that 2-3 years ago we had the article students or the case workers who have done the filings and the compliances, but now when audits are being picked up, we don't know what is the basis for the data. I'm sure as professionals we are very much organized in our work, but it could be a possibility that sometimes there is a direct JSON uploaded from the software which is generated, and we do not have any workings, and we may struggle at that point in time as to how do we go about what is the basis of that data. So I've made a little bit of systematic SOPs and formats and which I'll be taking you through, which can help us see. It might take another half an hour to 1 hour extra every month in the compliance work what we do. But if we have this kind of documentation, I'm sure all of you would agree and appreciate that it'll help us in the days to come to give us a basis of what we filed, what is the transaction level information which is captured in the returns. So that is the part 2 documentation. Again, this has been divided into 3 parts. One is how do we build working files for compliances? Basically, I'm covering 3B199C, which is mostly the general requirement. And as far as this master documentation, how do we keep a master data and also an index. I'm sure many of us would be doing a great job in this, but couple of few tips and techniques what I personally use or we personally use in our office that I'm going to share here. Then tech usage for documentation, assessments and audits. As I stated, you're getting scrutiny notices under section 61 of the GST law, and we might have received notices ADT1, in the format ADT1 under section 65. So GST audits are on the rigorous note, and many cases inspections are also happening under section 67. And you see that most of the times a lot of information is sought from the registered person. And at that point in time, how do we fetch the information, or how we can present it? All those aspects I'll be discussing today. Now, first part of the presentation is the GST configurations. Now, coming to the quick fundamentals, why it is important to have the right configurations. Many a times we have seen that, in the cases which come up for audit or annual review cases, we see that what data is there in the, let's say, day book or the profit and loss account that has not traveled into the statutory reports. Most of the times, either the accountants or the team who is working with respect to the GST returns, they might have gone into the statutory reports, generated a JSON file and uploaded it in 1 and 3B. And in such an instance, if there is mismatch between the day book, that is, there are some of the transactions which has not got moved into the statutory reports, then there might be omission of data. So there are certain quick things which we can understand to so that things do not get missed out, because we understand in GST there is no revised written concepts, it's only amendments. Up to September we have time, take section 37 which provides time limit up to September of the next year to do all the GSTR 1 related amendments. Section 39 provides for 3B related amendments, and again annual return when we file, we have an opportunity under 73 subsection 5 for the voluntary rectification of any errors and discharge of liability through DRC 03. All these are possible, but then errors can be very expensive under the GST law, and also the way we present the data. Many a times we see that the ITC related credit notes, let's say I have a purchase return, how am I going to report that in the return? Because tomorrow it can become an issue if it is netted off and reported. So these couple of practical issues and illustrations I would be taking through. So it's very important that we set the roots right. So if at the configurations level we have done the appropriate masters and ledger configuration, I think it'll go a long way in smoothening the return filing process, and error-free returns can be something which we can expect for certainly with the best of our efforts. So there are also various levels of configurations under the which are available in the Tally software. It could be a company level, inventory level, group level, accounting level, and it also there is a flexibility which is available where we can override the transaction configurations at the transaction level also. I've captured a couple of screenshots so that it will be better to understand practically, and we will certainly correlate with the legal provisions wherever required. So I'll be taking you through a couple of illustrations for outward supplies, and also very importantly the self-tax invoice. I'll talk about it a little later, but of course I'll be taking you through that. And also the no supply transactions, inward supplies, like for each category of transactions we have captured certain screenshots which may be handy. And we'll also run you through the GST statutory reports and how to manage the mismatches and how do we rectify that so that GSTR 1 and 3B will go error free. And we'll talk about the optimal mix of the ledgers, number of ledgers to have in order to keep the data return ready and minimize the manual work. So as I stated, we are all kind of akin and more familiar to using Tally as a software, and any software for that matter. The configurations are quite critical. Mostly it would be taken care by the accounting team itself. Probably the client would have taken care of that, but it would always be a good thing to review the configurations, especially from the statutory perspective. Since we're talking GST, from the GST perspective, whether the configurations are right, so that at the root if we address, certainly it is going to benefit when we generate the statutory reports and file our returns. The handy features which are available is, one is the GST invalidation. Of course, now if we check, even the GSTR1 returns have kind of upgraded and evolved if we compare it with the previous version of GSTR1. Because suppose, let's say there is a GST registration which has happened in the month of December, and there is an invoice which is dated November, but since the party has provided the GST, probably somebody is trying to upload that, or the supplier would not have known when this person has got registered. All these are possible. So GSTR1 itself will invalidate basis the date of registration. So I think, the returns and the technology where the GST also has evolved to a great extent. Thus, the validation of GST is also quite critical. Now, Tally has a feature of validating at the 15-digit level whether all the characters are right or wrong. So it would always be a good practice to check, because already in the portal we have check the GST number, like registered person, we can check either if we have a PAN number also, we can check the appropriateness of the GST number. If we have multiple GST numbers, all that is available. If we go to that GST portal, there we have a feature called check the registered taxpayer's GST number. So we can use that. But even Tally validates, if we just put all the alphabets, it doesn't accept. So that validation is there, and it permits multiple level configurations. Of course, it is flexible. Suppose if the configurations are too hard and fast, then certainly there is a flexibility that few of the steps we can skip and we can retain only what we would think would be ideal. So that is also there. And very good is the mismatch reports to understand whether entire data, whatever has been entered, has traveled to the returns. I think this is an important check to avoid the errors in the returns. So the fundamentals would cover the enabling GST in Tally. This is a very basic master setup. Since I just wanted the material to be comprehensive, I've covered the screenshots of everything, but otherwise this is very basic information. The master setup, the party setup, inventory setup, income expenses ledger setup, duty ledger setup, all these masters could be configured. When we say party debtors, creditors, along with the GST related configurations, and inventory setup, income expense ledger setup, duty ledger setup. Then as far as the transactions is concerned, outward supply, inward supply, or the sales and purchase, what we call in general. Now basically, any ledger when we configure, we can place it under three broad buckets. One is GST applicable, second is GST not applicable, third is we will not give any configurations. Okay, so broadly this could be any ledger. If we skip the step, it will go as undefined, so it will not get moved into my statutory reports. So the other two options is applicable and not applicable. When do we say not applicable? Let's say I don't want to report that in my returns. The dividend income, let's say, we would rather call it as a non-GST supply, but for timing, let's say salary payments or the salary income, which we do not want that information to come and display in the statutory report, that we may select as not applicable. Now, if we choose applicable, the further configurations could be done. Let's say I want to have multiple sales ledger, sales interstate, sales intrastate, that is possible. Let's say I want to have the registered dealers and unregistered dealers separate ledgers, that is also possible. So there are separate configurations which are available. Taxable and exempt, the Tally offers that flexibility where I can select what kind of a transaction is it. Is it an export? Is it an import? Is it an exempt? Is it taxable? All these configurations I can, again, I'll take you through the screenshots, which will be more of a practical perspective. And if once I select taxable, again, I can choose the rate. And for the expense transactions, it will also ask, and even for the sales related transactions also, whether RCM. So reverse charge mechanism is one of the legal provisions which is there, and 9.3 and 9.4 of the GST law, again of the IGST law 5.3 and 5.4. So these transactions, of course, now the relevance of 9.4 and 5.4 is limited only to the real estate sector. Anyways, but otherwise this reverse charge mechanism transactions also could be configured. The moment we trigger reverse charge mechanism, it will go and sit in the appropriate table so that under the returns it will go and emerge in the appropriate sector. So whether ITC is eligible, let's say I have took some sweets from a sweet meat stall, and we know that 17.5 there is blocked credits as far as food and restaurant or whatever that kind of services if we avail, those are all blocked credits. So there is an option which we can configure so that in the return there is a designated space where we report the ineligible credits. So once this is configured that way, it will move into that particular segment. There is also another feature in Tally where we can configure whether it is non-GST. Let's say I have petrol bills and that fuel will get covered under the non-GST transactions. We can even configure it that way. So one important point to note is that the moment we say GST is not applicable or the moment we don't do any configurations, both these categories do not travel into the statutory reports for the return data. Whatever we select as applicable, all that will go and travel into the written information. However, if there are any conflicts in the configurations in the transaction that's been entered, let's say I have configured as interstate transaction, but I'm entering as CGST, SGST. So there is a conflict, right? It should have been IGST. Then I get an alert. But if I override that alert, it will still allow me to proceed. So likewise, configurations will certainly help us. Now, as I was discussing, there is a hierarchy for the configurations. At the company level, let's say mine is a consultation service, everything is under 18%. So I will not do any further configurations. At the company level, I'll fix as 18%. If I don't do the level down, the next level configurations, it will adopt from the company level. Suppose I am a product company and I'm required to maintain the inventory record. So I am doing an inventory configuration also. That is also permitted. Under the inventory configuration, it can be stock group, stock item. Now, as far as next level, the ledger level. Again, there we at the group level we can configure or under the ledger level. Suppose if I don't do at the individual level, let's say I stop at stock group, whatever item comes under that stock group, it will adopt the configurations of that group itself. It is like inheriting from the parent. So similarly, the ledger group also works the same way. Then we have the transaction level. Let's say I don't want to have too many ledgers. I don't want to have sales interstate, sales intrastate, sales reverse charge, sales forward charge. That is too much for me. Only one of a transaction will come under reverse charge. So what I'll do is at the transaction level, I will enable and override so that with a single ledger I'll manage and I'll accept that overridden transaction that will go to my written information. So that flexibility is available. Now at the various levels, these are all the configurations which we can do. Company level, the GST, rate, HSN, whether reverse charge, all this could be done. Inventory level, item name, rate, HSN, UQC, the unit could also be configured. And the group level, the group name, rate, HSN, whether reverse charge, ledger name, rate, HSN, UQC. And transaction level, two things we can override, tax rate, HSN, and also tax type. So all that is permitted. So this is the company level. Once for all, I go to the company level, configurations, and there we have the statutory options, and then we go the GST details. We know that for configurations in Tally, F11 and F12 are the common keys which are used. And once we access that basic level information, we will be able to do this configurations. So at the inventory level, the rate part, the item part, and the HSN, everything could be done here. So we have this. So under the group, separate items could be further taken up. So here is the quantity. Let's say I want a different name, but I can still map it to the drop down which is available in my GSTR1 returns. So that is also a flexible option which is available. And at the group level itself, we want to say everything under this group comes as a reverse charge. Then we can click a yes here. So that configuration is available. Again, at the ledger level, if we want to change it, we can do it. I have put that in a particular group. If I don't do any configurations in the ledger level, it will be adopt the features of the group. But if I change the ledger level, whatever I've changed at the ledger level, that is what works. This was the example I was giving, how we can override at the transaction level. Once we click F12 at the transaction, so this is the voucher entry screenshot. Here, if we click the F12 feature, it will say allow modification of tax details for GST. Once we click yes, at the transaction level, I can alter it. Let's say I have mostly intrastate sales. So 99% of the times I have intrastate sales. Now only for 1 or 2 transactions, I don't want to have another ledger called sales interstate. What I can do is in this very ledger, in this very transaction itself, I can click the F12 and choose interstate as the one of transaction configuration and then choose IGST. So that is possible. So this is how it is. Here it is sales taxable, but I want to make it sales interstate because it's only a one-off transaction. This classification details I can change at each entry level and then say yes, override the configuration, so that that will not go into my mismatch reports. So this is the general duty ledger configurations. We CGST, SGST, IGST. We can also have multiple ledgers like output in CGST or input CGST. Let's say we have single ledger, then we might get a confusion. Let's say we have a credit note, sales credit note. It will obviously come and sit in my debit side. Similarly, if I have a purchase related return, so that ITC will go to the credit side because I need to reverse that. So personally, I would prefer having 2 separate ledgers, that is output CGST, input CGST, so that if we have debits and credits in that, it will be easy for us to correlate while doing the annual reconciliations and all that stuff. Otherwise, we'll have to extract the information and do a little bit of review, additional review would be required. That would be a little easy as far as the reconciliations are concerned, but of course it will increase the number of ledgers. So that we'll have to take a call off between whether it is okay to have more number of ledgers or we would be more convenient this way. So, I mean, this is the quick fundamentals again. Once we select it's a sales taxable, it will be like an intrastate transaction. We have the rate configurations and all that. If we look at the right side window, these are the so many options which are available to configure. Whether it is a sales to SEZ, it's an export, LUT, or exports with payment, all that options which is available, and we can have the ledger configurations also appropriately. Now this is the various transaction level information once we key in that, and the interstate invoice. These are all quite basic, and this is if we are going to maintain with inventory and the rate wise configurations for the products. Once we select the products, the rates will be automatically computed because of the configurations. But yes, suppose I have made the transaction as sales at 12%, but internal configuration I've made it as 18%. Don't expect Tally to understand, okay, it's a 12% transaction. It will not. Name whatever you give, it accepts. But internally, what you configure the rate, that is more critical. So we'll have to validate that before creating and saving the master ledgers. So this is a case of bill to ship to transaction, where if we want to do allow separate buyer and consignee names for a bill to ship to, here we have to enable yes. So once that is done, and we get the 2 people details which could be filled in, so that my returns again will capture both of that information. Again, if we go by rule 46, which talks about the way tax invoice has to be prepared, it has 2 fields where it says if the shipping address belongs to a different thing, then we'll have to have the billing address as well as the shipping address. I think this configuration will help in adhering to that, and also my e-way bill will go smooth if these configurations are taken care. Now, yeah, this is what I had stated the other time. So, we can have this as a multiple ledgers with the multiple rates, or we can choose to have a single sales ledger where based on the products itself, it will categorize, system will categorize. So that is possible. Now, this is an exempted transaction. See, technically, we need to use a bill of supply for exempt supply. I think rule 49 talks about it, where whenever there is an exempt supply transaction, bill of supply needs to be issued. So this is the voucher configuration. The other screenshots which you saw were of Tally ERP9. We've been using that quite long. Now we have Tally Prime also. So this is a screenshot which has been captured in Tally Prime. Many of the features are quite common, and of course there are few differences in the new Tally. Couple of features are very good, and couple of features I'm honestly missing what was there in Tally ERP9. Anyways, so this is the bill of supply which could be configured. I mean, if we understand that interest received is an exempt supply, that also needs to be reported in the returns. So this is a bill of supply that could be raised for an interest received part. And of course, if it is an FD interest and all that from the bank, you know, many a times at the time of 26 AS, it is identified that some interest income has been received. So then with the grossing up of TDS, the bill of supply needs to be passed, and then there will be a corresponding receipt entry for that. Coming to the self-tax invoice, we know that the reverse charge mechanism is a specific compliance which is prescribed under the GST law. Many times what happens is probably they'll identify the transactions either in 2A, where the logistics people or the transporters would have uploaded the reverse charge invoices and they are discharging that tax, or they have a legal fee, or you know, the government related services or other, let's say, import of services. All those transactions they have, and they are required to oblige with the reverse charge transactions. It is important to note that section 31, which talks about accounts and tax invoices, credit notes and debit notes, is the chapter name, and section 31 prescribes the various vouchers or the documentation that would be required for the compliance. 31(3)(f) talks about the self-tax invoice, meaning wherever the reverse charge transactions exist, any credit claim should be backed by a credit claim document. Take rule 36 also. It says tax invoice is a prerequisite for claiming the credit. Likewise, in case of a reverse charge where I, as a recipient of service or recipient of goods, I am discharging the taxes myself, I'm required to raise something called as the self invoice. So how do we do that? Suppose if we again pass an entry, because it will be generally a payment entry or a journal voucher coupled with a payment entry. Now, if we do pass a self invoice again, it might lead to a duplication entry. So, or I'll have to use a reversing journal to reverse it back. Rather, what we have chosen is to create optional vouchers. Now, we have a feature in Tally which is called as optional voucher, where it will not give effect to the posting of the ledgers. The vouchers would still be there, but it will not have a posting impact, because I don't want the double effect of my transaction. I only want to comply with the GST law and maintain a self-tax invoice. Probably this would be a good idea to, maybe you could consider this, where we can create a voucher type called self-tax invoice and make this voucher type as optional, so that there is no double posting into the ledger and my ledger balances do not get affected badly. So that being the reason, we can choose this optional voucher and create the self invoice. So let's say this local transportation RCM, and since it crosses the threshold limit, I'm required to do a reverse charge, and I've chosen it as an optional invoice. So see, tomorrow the department, when it is taken up for audit, they're asking for the self invoices and all that. So it is very important, because any credit claim, it is not sufficient to report figures in 3B. We have 3.1D table where RCM is discharged, and we have 4A3 where RCM credits are claimed in the return. That would not suffice, because every credit should be backed by a valid credit claim document. In case of a forward charge, we have the purchase invoice. But what in case of the reverse charge? Because 31(3)(f) prescribes for a self invoice, we can have the self invoice all at one place. It is somewhere in Excel, or it is somewhere in another software. See, having everything at one place is always recommendable, so that we know, okay, once we generate the report, we know, okay, what are the self invoices which are existing. So this is the way we could have the self-invoice configuration 194 example also we have just coined in here. Similarly, section 31(3)(g) talks about a payment voucher. Here I would like to contrast it with accounting payment voucher. It is not my regular payment voucher which I pass for the accounting purpose. This is a GST payment voucher. What section 31(3) subclause G says is, whenever there is a reverse charge transaction, whether the supplier is registered or unregistered, irrespective of that, you will have to maintain this reverse GST payment vouchers. And that again, if I post it once again, because the payment voucher again in the rules which prescribe specific fields to be mentioned, rule 46 has been adopted even for the self tax invoice, which provides for the tax invoice field. Similarly, there is a separate GST payment prescribed, I think rule 50 if I'm not wrong, which talks about what all fields should be present in the GST payment voucher. So the same accounting voucher, I can't use it as a GST document. So it is better to have it as an optional voucher with the specific configurations so that we are compliant with the GST law. Now, this is a transaction which I was talking where not applicable. Let's say I don't want to report the dividend income. Technically, we may choose it as applicable and say non-GST supply, because what is non-GST supply is nowhere defined under the law, but it is there in the written. So it is again a matter of interpretation whether we want to include reporting of dividend received also or not, but it would be suggestible to go ahead with that. So if we do not want this to travel into my written data, because not every transactions require reporting. Let's say I have received a loan. That loan is a money transaction and it doesn't require any reporting under the GST law. So then if I choose the configuration as not applicable, it will not travel to my written information. So that is the importance of using this not applicable part. Coming to this inward supply, again the similar transactions. So here if we see, it's like imports, interstate from URD, all these variety of purchase from composition, there are multiple things, but you may choose to select this purchase taxable based on your configurations which is available. Again, this is a case of reverse charge where we say import taxable, and if you interestingly see, Tally has a feature where is reverse charge applicable. Once we click yes on this, it will go to my written information, so that tomorrow if at the time of compiling data for returns, if somebody misses out on this and reverse charge is not done appropriately, certainly a late discharge of reverse charge will count interest. Again, it has to be discharged in cash, because of the specific requirements of the GST law. So that being the case, if we configure the ledgers with saying that yes, reverse charge is applicable, then certainly it'll help us in not missing out the compliance part. But let us also remember, since I'm talking about import of services, doesn't mean that I have made some forex payment, there is an import of services. We will have to validate with section 13 of the IGST law, because to qualify something as an import of service, there are two things which needs to be considered. One is the location of the supplier, the other is the place of supply. Let's say the location of supplier and place of supply both fall outside the country. Classic example could be an intermediary service where he is providing the local, the place of supply is also provided locally outside the country, outside India for that matter. Then although I make a forex payment, there might not be an implication of reverse charge transaction. So we'll have to evaluate that at the time of transactions. And yes, if we want that reverse charge to happen, then this appropriate configuration has to be ticked in, so that it will travel to the written information. This is where human mind and the study of the contract and all that requires the background work needs to be done. And it's not like just because there is a forex payment, yes, this is an import of service and we will do the reverse charge. It doesn't work that way. So we'll have to apply the provisions and then enable the appropriate configurations. So this is where it is, like whether the reverse charge is applicable on this, and also if it is the rate of tax can be specified here. Similarly, this is an example for interstate transaction, and one is an intrastate and another is an interstate. And this is a, if suppose we want to do it through an expense journal, So we can use this kind of a format for the journal entries for this RCM transaction. And let's say most of the times what we see is table 5 of GSTR 3B is not filled greatly, because most of the times table 3 and 3.1 and 4 are greatly filled and returns are filed. But a complete return is that where table 5 is also filled. So let's say I have purchased something from an unregistered person. So where do I report it in my 3B? It is in table 5. Suppose I want to configure it so that I don't miss out on that information. I can select exempt here so that it will go to my return information into table 5. And this is an example where it is less than 750 and hence it is exempt. We have 12/2017 exempting this. So why again there are two configurations which is required. Here it is non-GTA, and here it is intrastate. Then we have the interstate part. Why should we configure it separately? Because again in table 5 we'll have to bifurcate the exempted transactions interstate and intrastate. So that might be handy if we configure at this level. So the system report will take care of all this. Again, this is the rate wise configurations. I'm sure this is all the very basic stuff, and just as a comprehensive information, this has been taken here. Yeah. So another important aspect is how do we capture the expenses transactions. Let's say I have audit fee for which GST has been charged. Let's say there is printing and stationery for which GST has been charged. So many a times earlier practices, a lot of journal entries were passed and then transactions were accounted. But it would be very much ideal to create something called as an expense voucher. It's a name of a voucher type which we are giving. And configuration type should be purchase. It doesn't mean we are grouping it under purchase ledger, don't get me wrong. The grouping will be under indirect expenses, but the type of configuration will be purchase, so that we will capture all these transactions just at par with the purchase related transactions. Although it's a P&L item and not a trading item, but still we would go ahead with the configuration called expense voucher. Category would be the purchase type. This voucher has been categorized under the purchase type, so that it moves to my GST returns, and when I want to do ITC comparison and all that, it will help a lot for fetching that information. So this is again a separate category of interstate and intrastate. Now fuel expenses we can select as non-GST goods, yes, so that it will go and sit in the appropriate place in the table 5. So again, salary paid, if I prefer not reporting it, then we may choose to keep it as not applicable, so that it will not go to this thing. Now, I was talking about refreshments, the hotel bills we have or the food bills, whatever is available. The credits on that are not available because of the restriction placed in section 17(5) of the GST Act. Now, what we can do is whether this credit is ineligible. There is an option in Tally for inward supply transactions. So once we select yes, then it will go and sit in the appropriate reporting. You can see here what has been circled is ineligible for input credit. We have selected as yes. So thus, if we do the appropriate configurations, my lot of returns related information can go readily to the statutory reports, and a lot of errors can get minimized, so that system will take care based on the configurations itself. Now we have this rule 37 which says that within 180 days my creditors needs to be paid, and if that is not done, then ITC needs to be reversed, and once I repay to them, then I can reclaim it. So we have a creditor aging report which is available in Tally. Of course, it is not like 100% we get a perfect, we ready report for this 180 days aging reversal, but at least we get the information about the aging of the creditor, so that some of manual computations could be done, and then the returns could be filed. Similarly, we have rule 4243 which talks about the common credit reversal in a business which has both taxable as well as exempt supply. I'm supposed to do the reversal in a proportionate manner, applying rule 4243 for common credits. Let's say I have consultation charges, the rent paid, or such other common credits. I need to do reversals. In case of capital goods, it will be reversal under 43. Obviously, all this requires the human computation, or the manual work would be required. But then it would still be possible if we can fetch the ITC register and classify the credits. Even we may use the cost center approach to classify the credits as per my rule 42. We have the T1, T2, T3, T4 and C2 credits which is there, and we can use this cost center approach and fetch that information and then do the reversal using a pivot table. We can compile all the C2 credits, common credits, and then do the reversal. So we can use a mix and match of the technology as well as the human analysis and then do the compliances. Some other reversals could be the credit note related reversals. Of course, if that is configured again in Tally, that we will get the those reversals. But there could be some ineligible credits which was missed on during the configurations and all that, and interest calculations and any corrections or amendments required. All that has to be manually done. So this is the creditor aging analysis report where you can go to display statement of accounts, outstandings and payables. So here you get the creditors. We can go to the group, and then here in the group we can select less than 180 days and greater than 180 days, and then we get the particular report. Now I was talking through all the time about the mismatch reports in the statutory reports which we get in Tally data. So this is the transaction level. What it says is it's a sales data, the tax details are modified. Here we are overriding at the transaction level. In the previous slides I showed you that once we do an F12, it will allow us to modify. If we select that option, modify details at the transaction level. Give you an example that 99% of my transactions are intrastate. Only one of transaction is an interstate. I don't want to have another ledger for it. So I can modify it right at the transaction level. Once I modify, I get this information stating that your tax amount does not match, or let's say I am rounding off my tax figure. So manually, whenever I edit something, I get this information, and we get these three options: accept, override, back. So if I say Y, if I type Y, that is accept, it will time being allow me to save the transaction, but it will throw in the mismatch report so that I'll have to review it and take a call later at the time of return filing. If I say override, it will not throw any conflicts. It will go to the return information with overriding the configurations. Or if I want to do, suppose it was a mistake, I did a mistake while entering the transaction. I had to do a CGST, SGST. By mistake, I clicked IGST. Then for me, I have to go back and edit that transaction. This feature is quite handy, and it offers the requisite flexibility. Now, if you look at here, here we have incomplete or mismatch in the information to be resolved. There it gives me an indication as to what all the mismatch transactions are there. Okay, just give me a minute. Yeah, it is circled onto the it is circled in red, which shows that okay, not all the information has traveled to my returns. So this is the display and statutory reports we get. Display outstanding, and G is GST returns. That is the shortcut for that, and we get this. And once we go here in the statutory reports, it's very important for us to check whether there is any incomplete or mismatch in the information to be resolved. Otherwise, all the transactions might not be captured in the returns. Once we ignore this and generate a JSON, it will certainly be omitting these transactions which is incomplete or mismatched. So because why this will come and sit here is there is a conflict in the data which we have entered. The configuration says something else, the data is entered something else. So we have to resolve that, and then only the returns would be allowed to be filed. It otherwise also allows us to file, but certainly it will be, we wouldn't be happy without knowing the errors to file the return. So here let's say it's an import transaction, but state is given as Tamil Nadu. So that is the conflict here. We have to alter these configurations and then resolve this matter. Similarly, the value is not matching. Likewise, some of the errors, like the nature of transaction, we have selected as interstate, but we are doing an intrastate transaction. Likewise, those mismatches will come up. And tax amount, this is the actual amount, but I have made a different as per calculation and as per transaction. There is a difference in the value which is entered here. Suppose I am okay with all these conflicts, I can still say override or accept all the conflicts and move ahead. But it would be ideal to have a look at it and then go ahead. So the other one what we saw was for GSTR 3B. This is for GSTR 1. Always better to check this part whether there are any mismatches or incompleteness in the data. So this is what it is here. Let's say it's an export transaction. So shipping bills are not entered probably. So that information is not there. That is why it is showing this error. So, we can either, here the GST number is invalid, shipping bill is invalid. These are the errors which are coming in. So we'll have to resolve these matters. And, we'll have to understand what are these exception types, or if we don't want these things to be included in the returns, we can say exclude vouchers, or we can accept the transaction as it is and then file the return. So that is there. Now we understood that, okay, there are so many types of configurations which is possible under the software. Now, how do we do a trade-off between the number of ledgers, the optimal mix of the ledgers we're going to have? The ease of data entry versus ease of return filing. See, the moment I do too many ledgers, the complications at the data entry level will increase, because instead of one sales ledger, there are 6 sales ledgers which are coming up. Sales 12%, sales 18%, sales exempt, export sales. Each variety it is coming up. So the person who is doing the data entry has to wisely choose it. I mean, he has to apply his mind and choose the correct ledger to do it. But once that is done, the return filing will be at ease, because all configurations are taken care. Data entry is happening to the multiple specific ledgers. Reconciliation will be easy and all that. However, the alternative cases, I'll have only one data, sales, and it will be easy to enter the data, but comprehensive review before return filing would be required. Whether it exports, all that needs to be taken care, and then it has to be appropriately bifurcated, manually, information has to be segregated and then has to be filed. So I've taken an example of carriage inverts. It's a common ledger which most of the any trading business or any manufacturing business would have this carriage inverts as one of their ledgers. So we can have so many carriage invert ledgers. I have taken 10 examples. Why? There is a possibility where GT has opted for a forward charge and he's doing a 12% rate, and we are taking ITC on that. He's not asking us to do it on reverse charge. He himself is doing it a forward charge. So I'll create something called as a carriage inverts forward charge, GTA forward charge transaction at 12%. Now we have GTA reverse charge at 5%. Correct? No? So he would have chosen the reverse charge option, and I have to do a reverse charge. Again, that person could be registered. Let's say VRL Logistics, who's registered, and he is raised a reverse charge invoice. There could be some other ABC Transport which is unregistered, and it could be intrastate, interstate. So just my reverse charge will have 4 ledgers if I want 100% proper, single ledger having all the configurations intact. So it will be 4 ledgers for reverse charge alone. Let's say the transaction is below 750 or it is exempt. So I'll have GTA exempt intrastate, GTA exempt interstate. And let's say he's not a GTA, he's a GTO, let's say goods transport operator. He doesn't fall in the category of GTA at all. So being a GTO, probably the transaction is also exempt. So then we say it as a non-GTA exempt, non-GTA exempt interstate. So 10 ledgers are possible. What could be an optimal mix? So instead of making it rate wise and all that, I'll make it as an optimal mix: carriage inverts forward charge, carriage inverts reverse charge, carriage invert exempt. At least I have 3 categories, and basis which I can go ahead. So likewise, we can decide on the optimal mix based on the client requirement, and then or even our professional acumen we may use, and decide upon what would be an optimal mix of the number of ledgers to have. So this is till now we covered about the part 1, which is the configurations part. Now we will be taking you through the documentation part. Okay. So I mean, since GSTR 3B, you know, we generally call it as a glorified challan, because at least now we may have to think about renaming it to something else. But otherwise, till now, you could have, I mean, system wouldn't prompt anything till few months. System wouldn't prompt anything much if there was a huge mismatch between 1 and 3B. Many a times, you know, things have happened where GSTR 1 has gone, but 3B of some other client has gone into some other client. All these things, you know, would have, by overlooking or by some confusion, something would have happened. There was no cross-check mechanism of data of GSTR 1 coming into that 3B. But now we have system computed 3B which is coming in. Of course, it can be altered, but at least there is something from the system level which is coming, so that we can compare and see, okay, what is grossly, there is no error per se. So this is the basic 3B list. I'd like to take you through a couple of demonstration files so that we can understand. Hope my screen is visible. Can the organizers just confirm? Because I've moved away from the PPT and opened my Excel file.
Yes,
Is it
visible,
visible?
ma'am. We can see your, yeah, we can see your Excel sheet, yeah.
Correct, correct. Yeah. Thank you so much. So this is a sample format which we have prepared, and every working is substantiated with a transaction level summary. So we have the various categories here. Let's say I want to know the B2B transaction. So we have extracted sales register. All it takes is a 5-minute task from Tally. We go here, display accounts, sales register. Let's say for the month of December, I want to export the sales register. So I just say Alt E, or this export. It'll just generate this information. Suppose I want a columnar information, that is also possible. Here, here we say F5 columnar. So all this we can click and we get a columnar information, so that the GST details, everything we see here, we get the GST details, everything will get captured. All it takes to generate one report and extract and put it is hardly 5 minutes, because there is so much of compatibility with the Excel worksheets and all that. So just ask your team to extract this information and put it, because many a times, let's say clients doing the accounting, they have a lot of version issues. Practically we see that last month what data they gave, this month when they gave and last month's data is compared, things would have gone different. Things would have changed. So tomorrow, for us to know what is the basis of these figures, it is always better to have transaction level summary, because what is this figure? That case worker would have gone, article students would have completed 3 years of articleship and would have left our firm. Where do we go at that point in time to figure out how did this figure come in? So always it is prescribed, it is better to have a transaction level summary for each of the information whatever you are giving. Similarly, we have this zero rated transaction. So let us have this exports register. It is again, if we are validating it with IceGate, we better have the screenshots of IceGate also, because today especially we're going for refunds and all that, there is a multiple portal related verification and validation which happens. Similarly, we have this exempted transaction. So here we have the exempted, all the bill of supply summary or the exempted sales summary. So we know the transaction level information of what information is going into my various tables. Similarly, we have this reverse charge transaction. So we have transportation, packing, security charges, renter cap, so legal services. So we know what is this information, which rate does it fall in. And we were also, if you see here, we have categorized it as T4, T2. So what is this? Is the rule 42, for the rule 42 reversal, this is the coding which has been given, so that we can filter it by that and then do the corresponding reversals only for the C2 part. So T2 would be ineligible, T4 will be fully eligible, T3 is again ineligible because 17.5 restriction, C2 would be the common credit. All these short forms of that, whatever I'm using, T4, T2, it is all taken from rule 42 of the CGST Act. So that is it, and let's go back to this. Then we have this common credit reversal. Let's go to that. Okay, coming to this ITC part. Okay, so we have the import of goods. So here we have the import of goods related transaction. So here is the custom duty paid and the I mean, so we have the complete transaction level information. It is also ideal to kind of take this bill of entry information also here. Let me just take you through that. Better we capture that, let's say this is an imported purchase, we better capture that bill of entry transaction also, because we know tomorrow there is a audit being happening, and we want to know what is the basis of this. See, because if client has done a wrong data entry, now we are relying on the tally data, the external, where is the external validation and confirmation? So the one file, Excel file, what we have in 3B, it should be a repository of everything. If I have this file, okay, the entire written information is available with me. We can also capture the ICAI screenshots as I stated. Now here we have the ITC registered part, register part. So here is the ITC, where let's say we have the purchase list. I have my purchase register. I know which credits I've taken. So this will certainly be of very much importance, because nobody will know after 1 month what return has been filed and what figures have gone, unless appropriate documentation has been maintained. See, the convenience the tally offers, let's say display statutory reports O and GST. Okay, so I select, let's say, any month. Okay, I've clicked on 3B, just give it some time. Yeah, so it's a February month, there is no mismatches. What I'll do is I'll generate a JSON file. Okay, so I'll say here, I'll say JSON file. So this is the file. Once I export it, yeah, it is going and sitting here, and that file I'll import, and it's all done. Okay, most people just go generate this JSON file and they're done with the return filing. But let's say tomorrow, for some reason, this data got corrupted, or the transactions underwent change. How do you track what was earlier, what is now? So if we have this, I mean, here again, we have a feature where I can even entire Excel spreadsheet I can generate. So at least this information will be captured. This is the information which will come. But again, it will only give me the values over here. What is the basis for these values? I'll have to click here. Again, if I see here, yeah, everywhere you have the export option. At least, see, as I said, it will take 15 to 20 minutes. Go to the individual screen, capture the transaction level information and export it to Excel, so that tomorrow you have the basis for whatever returns you have filed. That is my only point, whole and sole point, which I'm trying to make here. So as far as this common credit reversal is concerned, we have all the C2 credits which have been nailed up here. So here we have the legal services. That is the only C2 credit we have taken in the example. And that we have this exempt turnover and total turnover ratio, which we are reversing. So we have the basis of what we have reversed. And here we have the 17.5, which is the T3 credits or the ineligible credits. That basis I have, which I'll be reporting in 4D. So this again is generated from tally itself. We have these exempted transactions over here. Yeah, here we have. Once we do the configurations, it will go and sit in the appropriate place. And for this again, we can have a breakup of, okay, how did we arrive at this information? Then it is better to have a comparative between 3B and 1, so that we know, I mean, if there are any specific differences for whatsoever reason, we have the adjustments being recorded and available over here. And we can have a P&L extract, so that what is the P&L at that point in time. Then a TB also, trial balance, so that tomorrow if some data undergoes change, it will be easy for us to map it. We can use a simple VLOOKUP formula and map with the ledger name to say, to identify which ledger has undergone change. So tracking would be easier. So again, in case of advances, we can extract this sundry debtors register, and what all advances have gone into this information. Just a moment, I'll just enable the editing part. Yeah. Yeah, so I know what information is coming from this, and we are making an inclusive basis of advance because it is permitted. I think Rule 30 permits inclusive basis of tax discharge. So if we are doing that, then we have the basis for this advances also. So here we go. So because that is not automated in Tally, there is a receipt voucher configuration which is possible, but then the entire amount will not get automated in Tally. So this is a sample workbook which I wanted to show, which will which can really help us to know everything at one. I mean, all the related information will be coined at one place. Similarly, this is GSTR1. Tally itself has a feature to get this type of a report. Better is to get this information at the individual transaction level, so that tomorrow we know what is the basis. And again, HSN workings we can validate. We can use a pivot table because some of the transactions might be B2B, B2C and all that. If we use a pivot table and sort it out based on the HSN, so we know based on this HSN, how many UQCs are there and what is the quantity, total value, everything. I think based on the HSN information, we can use a pivot table and then report the information. Of course, Tally also does that, and if you have configured it properly, HSN information will be coming over here since we are watching 3B part. So that inventory configurations which I was talking about, that if it is done properly along with the HSN as well, then it will be available here. Here's the HSN summary. So here, if once it is captured properly, that HSN information will also come in. So again, we can export this and keep it as a working space. I mean, working part of the workbook what we're maintaining. Again, we have the document summary. I was talking about the self invoices and all that. If you look at this information which is there in table 13 of GSTR1, it says invoices for inward supply from unregistered person. We also have the payment voucher part. This I've already taken you through the optional voucher configurations, and that series needs to be reported. So all that can be had in one software so that we know the control aspects. Okay, so many self invoices and so many payment vouchers and all that. And coming to annual return workings, again, the system computed data could be compared with the 3B and thing. I'm sure after GST, most of the work is revolving around the reconciliations. Reconcile 3B books, 2A, 3B books, and also system computed 9 and table 8A, 2A, and all that. Too many reconciliations. I think without using the tools or the formulas, it will be very difficult to manually do all of these stuff. So certainly I'm sure many of us would be using many softwares, like it could be the GST support softwares. We use GST Zen. That is, I mean, again, I'm not promoting any software here. Clear Tax, a lot of reconciliation softwares are available, but I'm quite handy with the GST Zen because it throws up many good reports. I'll show you a GSTR 2A summary report where there is a Tally integrating tool which is there, so that can be integrated to Tally, and the tool will fetch the ITC related information and it will match and throw up a report. So this is the match report which is coming, books. So it's like everything is matched here. So this is a software and we use the software for the matching part. Then there are some mismatches. So this requires some manual looking into. Okay, these are the exceptional transactions we'll have to look into. We have this only in RCM, I mean only in portal. So it is not there in the books of accounts. So could be RCM related transaction, or there are some of the transactions which have been accounted in the next year, or there are some blocked transactions and some exempted transactions also. Sometimes people upload it under B2B and that comes in. And there are then we get a report where only in books, like it is there in the books of accounts, supplier has not uploaded. So we can have a summary report like this for a 2A reconciliation, where as per 3B what it is, as per the duties and taxes ledger of Tally, that is as per the Tally data or the books of accounts what it is, then what is this reconciliation, the 2A reconciliation part. I'm sure with the latest amendments coming in, we have the Finance Act 2021 which brought in 162AA, wherein all these while we were arguing under litigation, were saying that okay, Rule 36(4) has been brought into the picture, but has been implemented, where the reflection in 2A is a criteria, but then where is it backed in the Act? So how can a delegated law take over and bring in what the substantive law has not prescribed for? So that is where to probably make it clear, it looks like government has intended to ensure the reconciliation of the input tax credits. So that is where they brought in this amendment with effect from 1st January 2022. This section is being notified 162AA, where it requires that the reflection in the GSTR 1 or the reporting in the GSTR 1 of the supplier is mandatory for us to claim the credits. Again, the mere amendment in the CGST Act alone will not suffice, because we have the corresponding state laws which needs to amend. But anyways, the point is here that things are going in a direction where the reconciliations are certainly going to take over, and the filing of the perfect returns becomes very critical. And we also know that an explanation to 75 subsection 12 has been inserted, which treats the declaration in GSTR 1 and earlier it was 3B, now 1 also has been included, stating that whatever has been declared in GSTR 1 would be at par as self-assessed tax. And for the self-assessed tax, there is no need to give any show cause notice, nothing. Direct recovery provisions can be initiated. That is the power which has been given because of the insertion of explanation to subsection 12 of section 75. Again, that is getting notified on 1st of January 2022. All these things, I'm sure many people might go in for litigation or choose to litigate, but many of the clients might be willing to comply and shirk off the headache of answering the department and all that. All said and done, compliance is going to be more and more rigorous. So having the appropriate reconciliations would be a precondition and a requirement. So better we adapt technology and adopt to the ever-changing GST law, and try to be as compliant as possible. Anyways, I kind of digressed to go into all of that. But then these kinds of tools will certainly help us, because manually reconciling things, especially when the volume of transactions are too much, is really cumbersome. Your VLOOKUP also might not help, because sometimes repeated invoice numbers, the supplier A also might have issued an invoice called 105, another supplier also would have issued an invoice called 105. So VLOOKUP doesn't work that way. Of course, with e-invoicing, that is a unique 64-digit number which comes in, but then not all suppliers get covered under e-invoicing. It's only 100 crore and above as of now. So that being the case, I think these tools, the smart tools, the logic which they apply and try to match using technology, I think that should be a better way, so that we can focus on something more productive and more analytical rather than, of course, we can look into the exception reports and evaluate why those differences, but doing the entire process manually is certainly not advisable. So anyway, so that was a couple of demonstrations, and yeah, this I covered. And yeah, as far as 9 is concerned, as I would again prefer having a transaction level information for every table information which we are providing. We don't know what is that coming from, where is that data coming from. So the system computed auto population and all that, we don't have the basis for it, and we have filed something, and tomorrow during audits and inspections we are called for and questioned, and that caseworker is not available, we will end up in trouble of redoing the lot of work. And this becomes a never-ending reconciliation part that way. So I mean, it's like wherever there is a figure, it is backed up by my transaction level information. So that gives me a big level of comfort, because a lot of adjustments, be it credit notes, debit note, all that will be there. So I know the final figure, how it has arrived at the transaction level. It's again not some adjustment figure at the transaction level. Okay, what is what? Here I have the transaction level information. So that is more advisable. So I mean, this is the only thing which I wanted to share across as far as this compliances part is concerned. Similarly for the 9C part. So let's go to the next part. So anyways, now part B certification is not there in 9C. It's a self-certification. So that increases the responsibility of the registered person. Other control procedures is it would be always better practice to have the closing entries month-wise, the GST closing entries, and map it to the electronic ledgers. We have the electronic liability ledger, credit ledger, and the cash ledger, the portal. So that has to be validated with the books of accounts so that both go hand in hand. We can have the screenshots saved so that it perfectly matches with that. That can be a control procedure for the team to be followed. And it's always a better practice to have a index of all the filings. And many times we see that, whenever the compliance work has been delegated to professionals, for the OTP, if the client doesn't provide the OTP in time, a lot of time goes unproductive in these matters, which could have otherwise been used wisely. Gmail has a feature where, with the permission given by the mail ID owner, it can be enabled that particular mails from that particular mail ID only will get forwarded to us. So with the permission of the couple of clients, we have enabled this so that whatever mail comes from GST, be it a 3A notice or a OTP or any such information, that will come to the automatically get forwarded to us. And so that with the this follow-up for the OTP or that OTP getting expired, all this would be a little could be avoided, and time could be saved and productively used. So this way we can enable that auto forwarding of mails of only specific mail IDs. I mean, it should not be like all mail IDs keep coming to us. So but there is that feature in Gmail where we can enable that auto forwarding for specific email IDs. So I think that is some couple of things. And I'll also show a small index. I'm sure all of us would have this, but we would have, we have even made it as a Google spreadsheet so that sometimes people work from home and they update things and all that. Especially our past 2-3 years, there is this practice of working from home and all. So who has done what, many times you lose control of. So better is like, we can have all this information, the name of the client, frequency, we have the QRMP scheme now. So which case is being filed when, so we should not miss on the due dates, and who is the contact person for any information, that phone number, and who is the staff who is doing that work this month. Most of the time, who is the by and large who has done that work, we never know. It is always if something goes wrong, passing the buck happens. So and it's always we have learned in internal check procedures and all that, make a checker. So one person does it, one person reviews it, so that any material errors could be eliminated at that review level itself. So we can also have this user ID and password and the GST number, and this is the ARN number. So we have the practice of saving the ARN number over here, so that becomes a basis for us to ensure that yes, this month this return has been filed. So likewise we will be having for the each service wise we can have a separate index, and if any DRC03s have been filed on behalf of the client, we can have an index for all that. But see, otherwise it's always a struggle to locate it, and of course it will be available in the electronic liability ledger, but for which year, which month, and all that needs to be looked into. But if we can have a format like this, certainly it will help us. We have the tax period, so we know this client, okay, this day this DRC03 was filed. So now that audit under 65, the department is questioning, okay, you have shown so much in 1.3b, but 9 it is showed so much. And if it's only a 9 case and it's not reported whether it is filed to DRC03, because there's no place in 9 to report that. So figuring out whether any DRC was filed or not, this kind of an index will certainly help us. And this is again a listing. Many times if the list is missed out, for whom 9 is applicable, whom 9 and 9C is applicable, because at least now it's been like Below 2 crores, it is optional. 2 to 5 crores, 9 is mandatory. Above 5 crores, 9 and 9C both are mandatory. So that listing would help us. And we have an important links like ICAI verification for shipping bills and bill of entries, and jurisdiction. Knowing jurisdiction is an important aspect, because we don't know how to check the jurisdiction, because in the portal, in a profile, both jurisdictions are displayed, center and state. Sometimes you get a red highlight on one of the jurisdictions, so that way you may understand. But NIC portal, that is Karnataka portal, has there is that one good link, know your GST office. So that is a good link where on clicking on entering the GST number, it will show whether it is state or center. So likewise, we can have this important links itself here itself in the index file, so that whatever has been by and large frequently being accessed, and we can make this as a Google sheet instead of the office regular desktop Excel file. Because if there are multiple people working from different places, if they want to access this file, a Google Excel sheet will help us to access through cloud, so that and it will get updated also over the cloud, so that when multiple people are working from multiple locations, it will help the updation of the same file, and version issues can be avoided. So as far as this master documentation is concerned, we can have the case wise history, and especially the amendments history. It is always better, because if when we are filing 9, we realize that, okay, how many years information we have to see. Current year plus, let's say for 2021 we are filing, we'll have to see 2021. Then till September we have to review whether we have done any amendments for the next 6 months, because there is a time limit to make amendments. Then whether any past, that is 1920 related transactions came within September of 2021, that overlapping transactions has to be eliminated. And if there is no appropriate documentation maintained about the amendment history, we are going to go mad with what is that figure and how did we arrive at that. So having SOPs and checklists, I'm sure as audit professionals, we all have a wonderful way of doing the work. We all maintain enough audit documentation when we do all this work. These are all my personal experience, which I just shared. And most of the time, in the we being in the service industry, we face a challenge. We have a 3-year article trained student who would have learned a lot, and they would have given us that comfort level of taking care of the compliance, and suddenly the term gets over and they leave the organization. We get into a difficult position. Similarly, there are some complicated cases where most of the times we have 1 or 2 people in the office only knowing. This month both of them didn't turn out. What do? We get so tensed, right? So what we can do is, today we have a lot of screen recording softwares and all that which is available. What we have done is a couple of complicated cases. The caseworker who does the work, we have made short videos out of it for internal usage, so that when that caseworker is not available for that particular month, there is a backup which is available to understand how the exact procedure is followed to do that compliance, and the juniors can learn watching those videos, so that these are all the things to be checked. We have the checklist, and also there is a screen recording video which is available, so that they can see, watch, and then repeat that procedure. So that is something we could think about. And many times what happens is we get questions like, okay, now this HSN is changing, or this rate is changing. What is the rate I should apply and when? So we would, it would be really appreciable to avoid the oral answers, because we would have said something, client might have understood something, and tomorrow it'll the buck will be passed to us. You told us, so that's why we did it. So always better to have in the case wise history, better to have what are the suggestions which we gave. Even if it is an oral suggestion, it's better to mail it across along with the substantiation. Okay, why did we say that? What was the notification basis which we said that? Because we know I think in the GST law, that's why we came out with this Insta GST app also, where we don't know how to track the notifications. 9C, so many notifications have come, rules have got changed, all that. Or take this particular rate change, HSN related rate changes or service related rate changes. We don't know when, what happened, or only that particular case we would be knowing, and it might be difficult to access that particular notification. But making a master case history and noting down the specific applicable notifications basis which we advised our client will ease our work, and we get things handy. All this again can be either we can use a cloud software to save it, or we can again use simple Google Sheets with the folder mechanism apart from the desktop, so that it can be easily accessible to us. And whenever we have done any amendments, adjustments through 9C and all that, better we have special notes worked out for all those adjustments which we made apart from 1.3b at one shot, at one place, so that it will help us easy. I'm sure we all are gearing up for the litigation work which is coming up under the GST law, and day by day, from the professional perspective, the opportunities are increasing. We are seeing so many GST department audits happening. We're seeing so many ASMT 10, section 61 scrutiny notices coming in. Section 67 inspections, we get it in the name, endorsement, assignment note, all that happening. So the litigation practice is certainly something we can look forward for, and this kind of a documentation will help us understand about the entire case at one shot, because hardly they give us time. Again, we can seek time and all that, I agree, but then getting all the requisite information at one place, it is always quite help us to be organized, and the time should not go waste in searching for the information. Rather, it should go on application of the application of our mind for, or the analytical part of it, rather than the mundane unproductive part of it. So then what were the notices which have been received and what replies have been given? We can chronologically number the documents so that we have a track of the entire communications which are happening. So anyways, so this is this I've already shown, and this is sample GST audit case under section 65. Here is a list of transactions which they've asked here. So and again, many a times any letter that comes from the department, we'll jump into the things, and as per the list, whatever they've given, we try and submit everything. Most of the information is available with the department. Now that there is data interchange between the income tax department and the GST department, there is something called as this third party verification happening, and there is also this DGARM, which is the department level artificial intelligence has been used a lot by the department to identify mismatches, and not every mismatch will lead to any tax burden on the assessee, but there are so many reasons for the mismatches. The point is that whenever we get a GST notice or whatever letter we get, when first we will have to evaluate whether it is I mean, they have the power to ask for all that information. Let's say they're asking for a 2-year reconciliation. Is the registered person under an obligation to do the 2-year reconciliation and provide? He is required to maintain an ITC register as per section 35 read with rule 56. He is required to maintain an ITC register. They ask for the product brochures or the pricing list which they have for the various categories of the dealers. Are they obliged to give all that? Section 2 subsection 13, which defines audit, prescribes set of documents which could be verified by the department. That doesn't mean every information they can ask for. So we may scrutinize, I mean, we may evaluate the various details asked for, and only that information which is required in accordance with the law, we may submit it rather than giving anything and everything, because the more the information we give, the more we need to provide explanations and substantiate things. So that being the reason, we will provide what is required as per the law. 213 what it says, section 35 what it says, rule 56 what it says. Only within that ambit, whatever information as a registered person that your client is required to maintain, he will do that, and only that he will submit. So this is this is what I was sharing, like give what is required as per the law and not just anything and everything that has been asked for. So here are my couple of closing remarks before we take up the questions. Work done but not documented is equal to work not done. Many times we say, I mean, the team members also say, I had done that work, but where is the working or the documentation for that? Sure, you know, we've been learning audit subject ever since, and the auditing standards, one of the standard itself has this audit documentation under as a wide aspect, and I'm sure we are all very good for that. That is how we get the recognition in this profession as well. But then it will be very important for us to train our team members also to have enough working papers so that it is self-sufficient when the work itself is done, and then we can do the resource optimization out of the available resources using technology. We can certainly do a very good job, and the facilitating of the effective knowledge transfer is very important, because whenever there is a change in the human resources in our organization, we tend to get kind of, you know, pressurized and all that. Now we'll have to train the new team all over again, but it should be a mechanism where we can have enough database learning modules in our internal this thing itself. So as I said, the recording of the major case work can really relieve a big lot, and there are so many juniors who are very keen and interested to learn these things, and we can incentivize them, or we can motivate them. Okay, we have a small practice where we say that anybody trying to explore anything new in Excel which can help us, so they get a separate incentive for that. So likewise, we can think of motivating people to do things in a smarter way, and that we can kind of create in the work atmosphere itself. So we have to get geared up for the assessments, audits, scrutinies, and inspection and all that stuff. And you know, we'll have to have a team which can back us up with the information what we require. I think the effective way would be to have the documentation at the time of work itself. Then you know, we should go for the tech solutions for repetitive tasks. I mean, more the tools and the Excel skills, the better it is, so that repetitive tasks can be done by the system, and only analytical tasks could be preserved for the human skills. So with this, I would like to you know, complete my part of the session. I'll be very happy to take up any questions that may be there. I'll be happy to address the questions.
Yes, ma'am. Yes, ma'am. So there is one question from our end. I will share my screen from my end.
Okay.
Is my screen visible, ma'am? Ma'am, is my screen visible?
No, no, actually.
The screen visible, ma'am. There is one
Yeah.
question actually.
Okay. So the questions is like, is the expense voucher to be created as purchase type voucher and optional voucher? No, sir. Expense voucher need not be an optional voucher. It should be a regular voucher, so that we can record all the indirect expenses in that format. Only the self invoice and the payment voucher, GST payment voucher, I had suggested for an optional voucher to avoid the double posting part. But expense voucher, wherever we have the audit fees or the printing and stationery, where we want the ITC register to be mapped into that we will use as a purchase type and not as an optional voucher.
Ma'am, others are just complimentary messages from participant. Only one question. So from SIRC end, I would like to give a note of thanks for the session, ma'am. I think this is really an informative session with jam-packed for 2 hours. So thank you so much for your time, ma'am. Actually, if any other question comes, we will share it in over mail, ma'am.
Certainly, I'll be very happy to reply over the mail. Whatever questions come, I'll be happy to answer them. And
thank you so much for your time, ma'am.
Thank you for inviting me over here as a resource person. I hope there was a little bit of value addition, at least from today's session. And
definitely. Thank you so much, ma'am.
Thank you.